You know, on one side of things, I feel pretty good about the idea that we were right and the market has been going sideways for NVIDIA. But on the other side of things, kind of wish I'd have been wrong and we actually got some movement. It's been a very boring week. A very boring week. The only good thing about having a very boring week is that if we were able to anticipate it, then, you know, we didn't waste too much time looking for something that we weren't going to get. Small caps mean reversion back in the other way, red but flat. NASDAQ also red but flat. Japan, we got data tonight coming out of Japan. It's going to go right back to the heart of that carry trade. It's their foreign investment in bond data. We're going to get foreign investment in stock data too for Japan, but still, we got data out of Japan tonight with NVIDIA tonight and a firm, and there's something else today too, CrowdStrike. But really, it's all NVIDIA, right? It's all NVIDIA. But when we had that really sharp sell-off, some of it was attributed to the massive amount of short sellers in the VIX. Some of it was attributed to the Japan carry trade. And tonight, if we sell off, will some of it also be attached to Japan again, or are they just going to blame NVIDIA for all of it? More and more analysts are coming out saying, I don't think they can hit these lofty goals. But of course, that doesn't really mean all that much because everybody expects them to meet expectations. It's the forward guidance that really seems to be the worry button. That Blackwell chip, a big deal. And then CapEx on the largest spenders in that same space for the next 4 quarters is going to be a really big deal. Hong Kong up 0.25%, even though they didn't have a very good day. They are kind of mean reverting a little bit. We're flat. We're flat. We're waiting. It's no change. Like I said yesterday, we could do a 5-minute morning briefing at this point. Just, you know, nothing's changed. See you tomorrow. We have an auction on the 5-year today. We have a Fed speaker. And then tonight, Japan, NVIDIA. We are going to get some jobs info tomorrow. It's not the jobs data that we're all looking for, but any jobs data needs to be respected. Goes to the heart of what the Fed has been doing. It will cause the market to closely analyze every little bit. And, you know, they revise those numbers. They get the headline numbers, then they come back when nobody's looking and they do revisions. So yes, it's manipulated. It's been manipulated forever. It's not like it's a new thing. We just work with the system that we have. So we have that on the table tomorrow too. There is a lot more NVIDIA put trading activity this time than we've seen, say, in the last 4 quarters. Very likely just goes to the worry, right? Not necessarily because anybody has inside information about what's going to happen. There's a lot of reasons to be concerned at this point. They're calling for a 12%, well, an 11% move in NVIDIA, plus or minus. And if you lay out percentages like I have right here in this lower chart, that's 10% in either direction. And what they're saying is that NVIDIA can actually move the market. Not just NVIDIA could move 11%. NVIDIA could move the market 10%. So know what you own, right? If SPY moves up 10%, what's that going to do to your account? And if SPY moves down 10%, what's that going to do to your account? This is called beta weighing, right? Look at everything that you have, convert all of those deltas into SPY deltas, and then ask the question again. With this range, though, it does give you some ideas of how far out of the money you could go if you're wanting to buy like a really cheap lottery, buy a call, buy a put, buy both. If you bought one of each 10% above and 10% below, how much would that actually cost you? And of course, if you buy an option somewhere along the dated range, you can sell one somewhere else as long as it's closer in time than the one that you bought. And at that point, you don't really care because you're covered. One thing's for sure is that they are juiced, right? So really short term, if you were looking at a lottery, we need 115 on the downside. It's about a $2 put, or 140 to the upside. It's about a $2.50 call. So even those lotteries are still pricing in, you know, I don't know about you, but $300, $250, that's not a lottery ticket that I buy. Not that I buy lottery tickets anyways, but even if I was, I wouldn't be, you know, they're supposed to be $2, not $200. A cheaper way to play the NVIDIA earnings, by the way, just play the Qs. 75 cents, $1. The Qs are going to get whacked. If NVIDIA does poorly, the Qs are going to do good. If NVIDIA does good, you could just use the Qs for a proxy, or any of the single stock ETFs do that. It's like a $16 2x NVIDIA. All right. The ADR at this point is almost to $90 for the average daily range. It's dropped nearly 13 points this week. As we go sideways, it's going to continue to compress. As this is counting back over the last 21 days and asking that question, how far have we moved on a day-to-day basis on average in the last month? If we continue to not hit the red lines on either side, then that number is going to continue to drop. At some point, though, we're going to come out of this range and then it's game on. Thursday is still the boss. It's still what we're focused on. So coming out to, you know, just a simple daily chart, you can see the very large candle that we're inside of. It's Thursday. The problem with really large candles is that we often stay inside them. That's not really impressive. It's an IX10, but it's not one we want to trade. It's when things really start to compress and we stay inside of that narrow range that it really gets the attention. So sure, that's the one that we've got to stay inside. When we've tested the edges of it, we weren't able to get through. There's a big wall of sellers up there. We don't know that we're done with them yet because we haven't made it through to get onto the other side yet. That's still the issue. At this point, just looking at yesterday's range, it's our most immediate concern. Any rally today has to make it outside the range of yesterday, and that puts us right up into that wall of sellers that we were talking about. 56.50, it's a nice round number. It's an options level, even if you don't see it listed in Spot Gamma's numbers. It is an options level. It's an important level. Liquidity resides on the other side of the pivot. That's where the sell zone begins. We have to get completely out of that. Typically, we would use some sort of measured tool. I've wrote about this, talked about it. But at this point, we can just look left and see where all the trouble is. We managed to get all the way up into, like 68. and we still weren't able to keep it and sold back off again. So, these sellers, that range is really wide. We don't know how far it goes. To the downside, we have the 10s underneath us, and things are spread out nicely between the 10, the 20, the 50. Everything's got a nice slope to it. None of that's going to save us if NVIDIA falls out of bed. For a move to the downside before NVIDIA, so just for today, what we're running around doing within our own day, we've got the halfback to deal with. 5632 cog line, the halfback 5630. It's where we opened yesterday. We've already tested it this morning. We weren't able to get through there. And if we consider that from just the last 2 days, it's a lot of buyers sitting down here. Now, I was looking at the CTA data. They didn't add yesterday to their position in the ES. They didn't take any off either. They didn't add. So they're waiting on NVIDIA. So this halfback, still a level of concern. If we can get through that halfback today and these buyers don't step up, then we have 5611 cog line, the low of yesterday. And then the round number 5600, which is basically the close of Thursday or the open of Friday. So really clear, clean levels. And on the one side, that's awesome because we have a great roadmap. And they're all known valid levels. And they tie in perfectly with things like open, high, low, close. So when you get cog lines and your open, high, low, close, what I call institutional pivots, all lining up at the same spot, then those are really great levels. There is a little bit of a worry that we can kick off today before we get the NVIDIA data. It's a really low volume environment, so it doesn't take much to move a market. And sure, on both sides, there's a lot of structure that suggests we're going to stay in the range and that we'll have a hard time getting through it. But unknowns are something the market doesn't like. So if we get hit with something out of the blue that nobody saw coming, it wasn't a piece of data, but just a bit of news, that could galvanize us, especially in this low volume environment, and really send us into a tailspin in either direction, up or down. I'm not advocating that we're going to go down necessarily. We could really kick that move off either direction. The main thing for today to keep in mind is Thursday's range. Yesterday, we really didn't go anywhere, right? I mean, we wicked outside of Monday's range, but we came back in again. We haven't tested Friday's low or Thursday's low at all this week. So I had a couple people earlier this week saying how bearish it felt earlier in the week. We were getting those sell-offs. We haven't even tested the lower edge of our range. And this range has been on the table all week, Monday, Tuesday, and now today. So we haven't even got there. And when we do get there, it still won't be bearish. It'll just be the lower edge of the range. And we expect the market to use all of the range, not just a part of the range. I live in small town and drive in the country a lot. And in the country, we just drive in the middle of the road, right? You got deer and all kinds of stuff that'll come up out of the ditch. And unless you see another vehicle headed towards you, you just drive in the middle of the road. Who cares, right? It's in the country and there's nobody around but the squirrels. So we use all of the road. It's the same concept here. We have a range. The market's not going to just typically stay on one side of that range. It will use all of it. So let's see, at the very least, if we're looking for something to play today while we're waiting on NVIDIA, using the other side of this range wouldn't be a bad way to go. That would mean getting below that 56.24 halfback from Thursday and using this lower edge down here. And we're not talking about selling off into oblivion or anything like that. 5611 cog line, and then 5600 round number, and then 5592 cog line. Overshoot that into this low, and then V bottom back up, back into the higher part of this range, and then we get the NVIDIA earnings. That'd be a really nice Wednesday while we're waiting. All right. Now, whether or not we're going to get it, yeah, we'll see. We got a good setup so far, having tagged yesterday's high and came off of it. So I would have liked it a little more if we'd have popped up into the 111. The fact that we didn't is okay. It's all right. But I'd rather have had, a breakthrough first before we dump down. And there's still time. We can get it. That's the current sell zone, 111. All right, so the range for the day, the CPR, central pivot floor for the daily, it's lower than yesterday. It's touching yesterday's central pivot range. Price opened above it. It's tested it multiple times. The fact that we opened above it is considered mildly bullish, but the fact that the pivot today is less than the pivot of yesterday removes that mildly bullish stance, and we could have a check mark in the bearish side, and those two kind of cancel each other out. It's also a relatively wide channel. It's not as wide as Monday, but it's still a wide channel. So it does imply that breakouts will likely fail, that they won't grow legs and expand. For the week, we're hovering really tight around that weekly pivot. And we've done this before. It makes a really nice springboard from here if we were to go up. That's like a coin toss, right? So on that one hand, if we do go up after NVIDIA, then it's likely to be, more in line with what Yardini has been talking about. I don't know if you guys know this researcher. He's been around forever. A really smart dude. He's like the most bullish voice out there, out of all the different popular, well-known analysts and researchers. Yardini is like the number one or number two major bull in the US markets right now. And he's saying higher from here. Of course, that is still dependent on NVIDIA, and he doesn't know any more than the rest of us how NVIDIA is going to go. He's been bullish, right? It's not like he just suddenly turned bullish. So if we're on his side of the discussion, then this will be a nice launch pad for the next leg up. We think about the big run, and then we had a digestion period, then another run from there, and now another digestion period. Just on some simple metrics, measure what we have and project that to the upside. 50% of this move gets us above 6,000. And generally, when we measure something like a pullback like this, we'll plot not just 50% of the move, we also plot 100% of the move. See how far we got last time from this pullback. We got to 50%, digested that, and then went up the rest of the way and made it 100%. Can't make this stuff up, right? Couldn't write a book that was this good. Where are we going? To the next pivot. Over and over and over again. So if Yardini's right, and we're doing what Adam Grimes calls a pre-consolidation breakout, then we're hovering right now, right underneath this big breakout point. Just like we did back here when we hovered in front of this big breakout point, pre-consolidation breakout. If you haven't read it, and I know it's an old book, that Adam Grimes book, The Art and Science of Technical Analysis, it's got a lot of good nuggets in there. It's worth a read. Search for it on Google. You should find a free PDF. If you don't, just hit me up. I'll give you a copy. Ten-day, 30-minute volume profile, nothing's changed. TPO, nothing's changed. At least on the TPO, it's a really clear, really clean, classic P-shape profile. Nearly textbook in its example. We could probably say that too about the 10-year, but it's so stretched, or the 10-day volume profile in green, but it's so stretched across the screen that it's hard to imagine it as that P shape. But yeah, I mean, basically it is. Still, we're not looking to see that point of control move anytime soon. We'd need at least a week of grinding at our current location. Well, actually, that doesn't even count either, because if we continue to grind here, we're going to continue to build up more volume here. There's nothing that is going to move this point of control within the next 5 days unless we break this range, go to a new one and pause, and then get a massive ceiling or an iceberg, right? So another leg up, call it like 5,700, and we run into a massive wall of sellers up there, and that liquidity is so big that it actually eclipses this, and that's hard to imagine. Or on the other side of that we dump down into like 5550 area, or even 5450, and we hit an iceberg, and there's such a massive amount of buying there that it encompasses and eclipses this point of control. And again, I don't see that either. So this point of control isn't moving anytime soon. And it's on a cog line too. You got to love it. 5632. I get asked about those cog lines all the time. And I haven't validated a cog line in a couple of years. I gave up doing it. It takes months to validate those cog lines, months of work. And they're just the same ones over and over. You kind of get tired of, like, did the sun really come up today? Yep. Okay, I'll come back and I'll look again tomorrow. Did the sun really come up today? Yep. After a while, you just go ahead and assume the sun's going to come up every day. It's kind of like those cog lines. We were validating those things when the ES was still at 28, and now we're at 56. You kind of get tired of doing it after a while. 5632 cog line, current point of control. 5-day, 5-minute mapping out the 5x5 got a lot of value in it to get you prepped up for the day. But right now we've got all of our levels. We've already talked about the structure. There's nothing really to add at this point. The point of control for the last 3 days is just overlapping each other. And there's some research on overlapping points of control, by the way, and how that structure works. You'd want to dig into like footprint charts, TPOs, maybe someone like Dalton. Dalton's, been a voice in that space for like 2 decades. He'd be the one to dig into if you want to get more on volume profiles and points of control. And that leads us to the week's expected move. Surprise, we haven't gone anywhere, so there's nothing here. And the range doesn't move once it's set. So nothing there. Our distance from the 10 is the same as it was, or it's getting a little closer because we're not moving, but the moving averages are. So we're correcting through time, holding steady while the moving averages get closer and closer to us. We're not overbought. We're not overextended. We haven't moved it too far, too fast. It doesn't owe us any mean reversion. Starting to sound a little bit like a broken record. No change, ready to go. The market didn't like that. That is a nice liquidity gap. Let's see if we come back and revisit that later this morning. 56.44. Dollar in the opposite direction. 10-year not quite stepping up to the plate yet, but you know, in the last few weeks, we've seen moves like this, and the dollar was falling with it, and the 10-year was falling with it, but not this morning. Now we're getting this little bit of a move this morning, and the dollar and the 10-year are doing the opposite move. Not going to read into that, just that it's the first thing I check when we start getting a big move. Are we moving with treasuries or not? This is generally how I look at it, right? There's your dollar on the left, the ES in the middle, and then I got the 2-year here rather than the 10. Got to update these levels. %50 of yesterday, and then that volatility trigger. If we get through the volatility trigger, that's likely to be pretty violent. We'll just start working our levels from there. 56.11, 5600, 55.92. Getting a little bit of the carry trade shenanigans. It's very likely to be a boring day. You got the end of today, and then we're out of it. We're done until the next NVIDIA earnings, right? And it's going to continue to be this way until the earnings comes and they don't delight. Maybe that'll be this time and we'll be done with it. But if it's not, if they delight again and the market loves all of it and we rally out of it again, then the next earnings, we're going to be doing this all over again. It'll keep going until it finally fails to delight. When will that be? Right? I don't know. But you know, I was talking to somebody the other day about having these narratives, whether it's the S&P, NVIDIA's earnings, the Carvana story, whatever the narrative is, whatever the market is, there's no way to get these except from the experience of being a trader, having been around, and then you were there when it happened, and you're like, oh yeah, I remember that. You guys remember when Boeing, right, had airplanes falling out of the sky and their stock went down, or you know, the Evergreen when it got stuck in the Suez Canal and how it messed up the market, sort of the Francis Scott Key Bridge collapse and how it hit the markets. There's these narratives, but you really only pick it up once you're in this space and doing it. Well, right now, the NVIDIA narrative is not a story from the past. It's still something we're dealing with, and it's going to be that way until they finally fail to delight, whenever that point may be. So remember this, because if they delight again, next earnings, we're going to be doing it all over again. Bitcoin down some more. It's finally giving up the last little bit of gains that it had. Remember, it was down yesterday, but it was still up some over a 5-day period. Well, we're basically really close to flat over that 5-day period after falling another 3.5% today. Gold and gold miners are down over a 5-day period. They're still down. So this is just adding to how far gold and gold miners are down. China ADRs is kind of a mixed bag. I've seen some China stuff was up, but the China internet stocks, KWEB, down, and more than 4% over a 5-day period, but only about 1% this morning. Right? Exactly. You know what? Costco too, right? Did you see that move in Costco? And someone hit me up and was like, where's it going to stop? And I put my measured move on it. And I would be worried right around this area. What do you think that measurement is? The 1, 2, 3, 6. And it hit it and immediately dropped the other direction. Pretty awesome. And if you go back far enough, I was measuring from this location, but if you go back far enough, you get a 111 tag. There's your 1, 2, 3, 6. Could have swore when I measured that yesterday, it hit it. I think maybe I was measuring without the wick. I was on one of my smaller charts, but that's close enough for me. I guess we could have just stayed there. We got to look at bonds. $100 has been the issue here on TLT. We tagged it. We haven't got back to it, but we are above the half of this really big week. And look left, we got all this structure. It was still a sell zone. It was a known sell zone to begin with. So it wasn't like it was a surprise that we weren't able to get through 100. Plus, it was a round number. As odd as that sounds, round numbers matter. I talk to so many people who hate math. They suck at it because they were never taught how to do it correctly. And they just want the simplest that they can do, or none at all if they can get away with it. And round numbers makes their life easier. It sounds like a crazy reason, but if people are trading because the moon is full or not, which they do, then thinking that they trade because of round numbers, it's not too far off the mark. 22 million Americans believe that chocolate milk comes from brown cows. 22 million. Surely that is an inaccurate number. And I looked and it's inaccurate, but it's not far off. So, if if that's the kind of people that we're trading against, then, I don't know. So with bonds, we are holding above the half. And as long as we hold above the half, then we can take another run at 100. It needs to digest. Like the last time we got here, we had a huge digestion, right? I mean, we pulled back a lot. This time we got there and we pulled back just a little bit, like a really good cup. A cup has a handle of about 1/3, not half. And that's, I mean, there you go, right? We got there and we fell back, but we didn't get all the way to the half. A really good cup, and a cup is bullish, whereas a double top would be bearish. So, bonds, there's a lot of reasons to believe that bonds are going to continue to do good anyways, but it's nice to not only have the narrative and the reasons behind it, but to actually see the technicals line up on it too, and be able to point to it and say, yeah, it's forming bullish patterns. Cool. Yeah, that was nice, wasn't it? It's not a really clean liquidity gap. All things considered, I would have liked it on a 5-minute. It's a liquidity gap on the 15. That's fine. You can see that one from yesterday worked. We got right back into it, but I'm kind of picky on those because when you're selective and picky, the ones that you choose tend to work out better. We'll see how it goes. Watch the clock today, guys. Remember, it's not just NVIDIA tonight, it's Japan too. And I will see you all tomorrow.